A23. 100. 0.65. A3, 850. 4, 2504, 280. A3, 850. A/CH. N. Good evening, everyone, and welcome to our market analysis report. Today, the U.S. equity market presented a clear picture of structural divergence rather than a broad-based risk-off sentiment. To elaborate, the Nasdaq index declined by 0.83%, closing at 26,363.44, while the S&P 500 saw a modest dip of 0.17% to 7,723.55. However, notably, the Dow Jones Industrial Average bucked the trend, rising 0.49% to 54,349.12. This suggests that capital is not exiting the market en masse but rather reallocating from technology and growth sectors towards value and cyclical heavyweights. Another crucial signal reinforcing this view is the VIX Volatility Index, which fell 4.18% to 15.81. This indicates that systemic market fear remains extremely low, further supporting the interpretation of a rotation, rather than a retreat, of capital. We identify two primary axes for capital movement: firstly, an outflow from U.S. tech heavyweights, redirecting towards cyclical and value components within the Dow, and secondly, a significant inflow into precious metals. Spot gold surged by 2.68% today, settling at $4,308.40. Concurrently, the U.S. dollar index, DXY, broke below the 100 mark, closing at 99.69, down 0.16%, hinting at a marginal reduction in the actual attractiveness of dollar-denominated assets. Our comprehensive assessment is that the U.S. equity market is experiencing a moderate index pullback accompanied by intense internal rebalancing, with a 70% probability for this oscillating scenario. Reviewing the global market trajectory, the Asian session showed strong performance. A-shares saw broad gains, with the Shanghai Composite Index rising 1.47% to 3,878.43, the Shenzhen Component Index up 1.86%, and the Chinext Index climbing 1.32%. The CSI 300 also advanced 1.24%. The entire market demonstrated a synchronized upward movement across both growth and heavyweight sectors, clearly extending the bullish momentum from the previous 2 days. The RMB exchange rate remained stable around 6.74, with no apparent signs of intervention. Asia was unequivocally the source of positive sentiment today. Moving to the U.S. session, as observed, the three major indices diverged. The Dow rose, while the Nasdaq declined. In fact, Nasdaq futures had already dropped 0.98% before the U.S. market opened, indicating pre-market selling pressure on tech stocks, which was merely confirmed by the closing bell. The turning point today in terms of market style occurred with continuous selling in the U.S. tech sector shortly after the open. Value-oriented heavyweights in the Dow became sentiment leaders, while large-cap tech stocks in the Nasdaq acted as